August 12, 2014, current time 10:49 GMT. Jay Meisler here with the daily Forex trading outlook. If you followed me yesterday and even last week, I gave you the indicators which pointed to a downside risk for the euro. We're in kind of like a perfect storm, but the euro is being sold against everything, and just be aware of that, because if anything's holding it up, is that the crosses are also weak, and that means the dollar gets offered against some of the other currencies, or at least doesn't go up against the other currencies. So it's more of a euro move than a dollar move. This was a dollar move. The euro would be probably at 130 and heading for 125 by now. So let's look at what the charts are showing in what looks like almost like a perfect storm tomorrow. Just to let you know, the German ZEW came out today, much weaker than expected. That pressured the euro, although the move has been modest, as most of it took place before the number came out. And then you have the tomorrow German GDP is coming out, and it may have a negative print. So in that case, the euro will have a limited upside, at least until tomorrow's data comes out. Geopolitics still simmers. Market wants Russia to be over, but the Ukraine situation, but still looks like there's risk in there, and that risk also weighs in the euro. more so from the sanctions that are affecting the German economy more than anything else. Now, if you look at the daily chart, I pointed out yesterday, 20-day moving average, it's 134.43 today. It's acting like a trend line. As long as that trend line as long as it acts this way and continues a downward slope, the euro will have an offered bias. The other indicator I'm watching, and I will continue to watch, is a 100 period 4-hour moving average. Look where it held on Friday. We made a new run at the low today. Then you have the 1-hour chart, which is similar to all the other charts, which show key support here at 133.33. We've paused so far above it. The market will go after it if there are stops. If not, that 133 figure to 50 could be a sticky zone, especially with the target remaining at, and I will show you right now, 132.94. It's the same target I mentioned when we broke 134.75, and 132.94 remains the target, the initial target anyway. If that goes, then we come down into, looks like around 131. So that's where we stand for today. No real big data coming out from the U.S. You got to watch stocks. You got to watch geopolitics. But the euro does have a limited upside and should continue to have a limiting upside. Now you got to watch 133.50, because that's kind of like the bias setter when you're within 133 to 134, which is the current battle zone. If it goes above 133.50, the selling will slow. If we stay below 133.50 and that becomes resistance, the market will run at 132.94. In any case, as I said, euro has a limited upside. The question is the upside at 50 or is it at 80? But ahead of German GDP tomorrow, it should trade offered. Now, I always point out my latest article. This one is if you're looking to make money in a low volatility market. It is an update to my 12 strategies to trade in a low volatility market and give you some insights in how to trade in this current environment. So I suggest you click on it. The link's embedded. Just click, go to the page, follow the steps to get access to it. That's it for now. Jay Meisler signing off until tomorrow. Good luck and good trading.